So that's step 2. On to step 3. In this case, now that we've done all this work to open up our income summary account with these two amounts, we're now going to turn around and close it out. And we're going to close it out to the capital account, right? This is showing how our net profit is increasing the value of our business. So since I have a credit balance for $60,000 here, that means I'm going to need a debit entry for the same amount to bring it to zero. If I'm debiting this, then I have to credit capital. If it was a net loss, it would be switched. I would be debiting the capital account because I'd have a loss to my business and crediting the income summary to bring it to zero. So I'm going to credit my income summary, and that is for that $60,000 amount. And my debit account then is going to be, or sorry, credit account, 1, 2, 3, 4, is going to be my capital. Which is P Marshall, comma, capital for the same amount. Right, so now that I've done that, I'm going to post that to my GL. So, and you'll see how this kind of brings it to zero, and that way you can also see like how the others all should work. Because all the temporary counts should all look roughly the same as this, just with different numbers, obviously. There we go. So that shows that my income summary account is now closed off. I'm going to take my $399, go back to my journal page, and make sure that I have it there. Okay, last step then is to close off our drawings account. So P Marshall Drawings has a debit balance of $42,000. That means I'm going to need to credit that for $42,000. And I'm going to be debiting my capital account, which is there, and that should make sense because that shows the value of the business, and we are decreasing the value of the business, so we should see that as a debit. So we're going to go back to our journal page here, 31, and we are debiting P Marshall capital, and we are going, and so that's for 42,000. 1, 2, 3, 4, 5, or sorry, the other way around. We are, yeah, no, that's right. Debiting the capital account and crediting P Marshall Drawings to bring it to a zero because it has a debit balance. There we go. All right, so that kind of completes the journalizing of those things. Obviously, what the part we skipped was where you would post all these to all these accounts, and then all those temporary accounts would then become zero. So the final step to wrap this up, which we don't really cover in this video, is doing the post-closing trial balance. It's exactly the same as a regular trial balance. The difference is that it would be much shorter because all these temporary accounts have a zero balance, and we don't show zero balances on the trial balance. And of course the title at the top is different. It's called the post-closing trial balance. Okay, and that is the end of this lesson.